A number of major participants in the banking business have made actions that have direct repercussions for their clients in recent times, which has caused the industry to undergo substantial shifts. The shutting of bank accounts by Chase Bank and the termination of credit cards by PenFed are two examples of such cases. Concerns are raised among customers as a result of these activities, which in turn prompts a more in-depth investigation into the factors that led to them, as well as the potential consequences of those factors. Chase Bank closing bank accounts. There have been comments and speculations among the financial community as a result of the decision made by Chase Bank to terminate some bank accounts. This change is the result of a number of issues, the most prominent of which being regulatory compliance and risk management, which are frequently mentioned as main reasons. The banking industry is subject to severe rules that are aimed to protect customers from fraud and money laundering, as well as to preserve the stability of the financial system. As a result of this, Chase, along with other financial institutions, conducts regular audits of its customer accounts to ensure that it is in compliance with the regulations. One of the most prevalent reasons for account closures is a shortage of activity or abnormalities that raise suspicions about the account. In the event that an account does not comply with the terms of service, exhibits indications of fraudulent conduct, or poses a threat to the reputation of the bank, the account may be subject to closure. Other factors that may result in the closure of an account include alterations in the risk profile of a customer or the bank's appetite for risk. The bank may decide to end the connection with a customer, for instance, if the customer's financial behavior dramatically deviates from the norms that have been set or if the customer engages in activities that are considered to be high risk. Banks often provide advance warning to clients in order to give them the opportunity to make alternative arrangements, despite the fact that the decision to cancel accounts can be uncomfortable for consumers who are potentially affected. To accomplish this, it may be necessary to move funds to a different financial institution or investigate alternative banking possibilities. It is also important for customers to check their account agreements in order to gain an understanding of the terms and conditions that govern closures as well as any available remedy from the company. PenFed closing credit cards. In a similar vein, the decision made by PenFed to terminate credit card authorizations raises doubts regarding the reasoning behind such moves. Credit card issuers such as PenFed conduct portfolio reviews on a regular basis in order to effectively manage risk and realize maximum profitability. When conducting an evaluation of accounts, issuers take into consideration a number of characteristics such as creditworthiness, patterns of utilization, and overall account performance results. If a customer's creditworthiness continues to decline, this is one of the factors that could result in the cancellation of their credit card. In the event that a cardholder's credit score drops dramatically or if they have financial issues that have an influence on their capacity to repay obligations, the issuer may decide to shut the account because they consider it to be high risk and decide to close the account. Additionally, issuers may be prompted to reduce their product offerings and concentrate on core sectors if there are changes in the competitive landscape or strategic priorities. In the case of customers, the termination of a credit card might have repercussions for their credit score as well as their ability to borrow money. The total amount of credit that is accessible is decreased when a credit card account is closed. This can lead to a rise in the utilization ratio and a negative influence on the credit score, particularly if the card had a substantial credit limit for the account. Furthermore, customers may find that their ability to make purchases, manage their cash flow, and take advantage of the rewards and incentives associated with their credit card is negatively impacted if they are unable to access their credit card. Implications for consumers. The decisions made by Chase Bank and PenFed to terminate accounts and credit cards bring to light the significance of proactive financial management and having a thorough awareness of the conditions that govern banking relationships. Regulatory obligations, risk considerations, and company objectives are frequently the driving forces behind these acts, despite the fact that they may appear sudden or unexpected upon first glance. Therefore, it is important for customers to remain informed about the changes that are occurring in the financial industry and to monitor their accounts on a frequent basis in order to spot any potential problems. Account closures should prompt affected persons to take measures to protect their financial interests and minimize any interruptions that may occur as a result of the closure of their accounts. This may require opening accounts with different financial institutions, combining accounts in order to simplify banking connections, or seeking the advice of financial consultants. In addition, customers should make it a habit to periodically check their credit reports and take preventative actions in order to either maintain or improve their creditworthiness. Both Chase Bank and PenFed have made decisions to shut their customers' accounts and credit cards, which highlights the dynamic nature of the banking business as well as the significance of adaptation and resilience for customers. Although activities of this nature may cause individuals to feel uneasy and cause them to experience inconvenience, they are frequently motivated by valid reasons that are associated with regulatory compliance, risk management, and strategic aims. It is possible for consumers to successfully manage these changes and protect their financial well-being in an environment that is always changing if they remain aware, proactive, and watchful over time.